Hello viewers, welcome to the Trade Show. I'm back with another exciting video. Let me ask you one thing. Has this ever happened to you that when you have analyzed the markets, but still when you enter the trade reverses, or it doesn't goes in your direction, or it suddenly hits your stop loss? If this is happening with you, then you're clearly missing out on these two things that I'll be discussing in this video. These two things are such things that not even big traders or the price action or the SMC traders discuss with you openly. These things are liquidity and market structure. But before watching this video, make sure that you have watched my previous video, which contains many interesting things about price action, which you may have not heard from other traders. Now, that is a very interesting concept, and that concept can be seen in this video as well. That concept is related to proper buying and selling. So, make sure that you watch this video and the previous video to ensure that you do not miss out on quality content. Because if you just follow plain price action, that is, if you just draw a trend line and you say, I will enter above the breakout or below the breakdown, things are not going to work that way, because the smart money is called smart money because it is smarter than us, or it is smarter than the losing traders. The smart money or the big institutions create such traps for retail traders wherein they continue to lose money and smart money keeps making money. So if you learn these concepts, if you keep watching my videos, then it's my guarantee that you will become a profitable trader. So let's move ahead to the video. So before moving on to the analysis part, let me explain market structure shift, and liquidity in short. This is for the ones who are new in trading or for the ones who just want to brush up their concepts. Assume that I am a big operator or a big financial institution and I want to sell 1 million lots of gold. So if I started open selling, then the price will drop so drastically that I'll never make profits. So as I want to stay profitable, what I'll do is I will create a small upside move. Assume that I want to sell from this level. So what I will do, I'll take the market to this level. I'll start playing in this region. I will give a big breakout, but the candle will be very interesting. Candle will go up, but it will not close above this level. It will close somewhere here. Then again, such kind of movements can be seen. Now, what is this? This is the thing that operators do to invite buyers. As I told you earlier, I want to sell gold and I want new buyers in the market. So I will invite the buyers. Then once they start buying, I'll start selling. Okay. Okay. So how did I get this move? I got 1 million buying orders. See, I have to sell 1 million lots, then I need someone to buy 1 million lots. I created this condition, gave a fake breakout. I invited the buyers who bought 1 million lots. Then I started selling, 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 selling. That's how the smart money manipulates the market. So, this is the importance of liquidity. Liquidity is the fuel, it is the volatility that is required for the market to move in particular direction. Without liquidity, market is just a consolidation. Now, let us see market structure. So, there are three types of market structure: uptrend, downtrend, and consolidation. Consolidation, I have shown you here. Consolidation is market roaming in a range. This is consolidation. As you can see, it is in a zone. But an uptrend is a series of formation of higher highs, higher lows, higher highs, higher lows, higher highs. A downtrend is a formation of lower lows, lower highs, lower lows, lower highs, and so on. So this is the market structure. Now, if I'm in an uptrend and if market breaks the previous high, then this is called break of structure. This is called BOS. Okay, so this is a break of structure. This is a break of structure. Let me just add the text for the people to easily understand these things. This is a break of structure. Similarly, this is a break of structure. Basically, downtrend and uptrend are just inverted. This is a break of structure. The break of lower low is a break of structure. This is a break of structure. Okay, but what is market structure shift? Now, market doesn't stay in a trend for all the time. It changes the trend. But how to identify that? See, assume that market is in an uptrend. Now it has to start selling. It will come here. It will come here. Okay. Now this is interesting. This is what change of structure is. Market formed a higher low, but it didn't succeed in forming a new higher high. That is, it did not form a break of structure. We wanted a break of structure, so we wanted this, but this did not happen. This happened. Then, when the market breaks its previous higher low, that is the previous swing, then we call it a change of character. I hope you heard carefully. This is the higher high, higher low, higher high, higher low, higher high, higher low. Failed to form higher high, failed to give break of structure, broke the previous higher low. Then this is called change of character. This marks the start of a downtrend. Similarly, here in a downtrend, this would be a valid change of character. This is a change of character. So if market gives a pullback, I'll just go for a buy trade. And here, if market gives a pullback, I'll just go for a short trade. So this is market structure. Just a minute. So this is all about market structure shift, and liquidity. Now let us move on to the examples which prove these things are pretty much correct. So I hope you have understood all the concept that I have explained about market structure and liquidity. If you still have any doubt, you can rewind the video, listen to the concepts carefully, and then move ahead. But ensure that you understand these things because these things are important. So now analyzing gold. So basically, this is how an expected market structure should look like. This is how a downtrend should look like lower low, lower high, lower low, lower high, lower low. But since yesterday, gold has given one-sided uptrend. So it was very clear that gold had to give a pullback. So my plan for today was I would enter a pullback. I will trade during pullback. So that is I will trade for downside trades, that is sell trades. So I had expected pullback near this level, but gold didn't came here, it came here today. So I planned the trades accordingly. One more reason, if you can see, gold is at a big resistance level in the 4-hour time frame, and all the forex instruments respect the 4-hour time frame. So it was pretty clear that gold had to give a pullback from this level because selling had started from yesterday, that is 1st of July. So when I woke up, I saw this kind of structure in the market. See, as you can see, gold started selling because it swept the liquidity. Then, see, I have discussed the concept of slow buying and slow selling in the video which I mentioned earlier. So make sure that you watch that video. The video link is given in the I button. So when gold fell, it was stuck in a range. It was consolidating and the buying was slow. So this level was seen as its local resistance, means gold had rejected from this level multiple times. Also, one more interesting thing, if you see this swing high and this swing low, I will use a fib tool to show you how strong is this red level. Gold has taken rejection from this red zone multiple times, plus there is a small fair value gap here, plus this is the golden zone, that is the zone between 0.5 to 0.68. So this indicates that a strong selling can come from this side. Now, an interesting part, during the euro session, gold had shown very slow buying. Like, buying is actually this one where it taps the level and shoots up, but gold was showing slow buying. It was confused. So it was pretty much clear that once it takes out all the liquidity in this zone, it will start falling. And exactly that's what had happened. Gold spiked up, gold invited buyers in this one single candle, took the liquidity from this red zone and gave a strong selling candle. So it was evident that gold was going to go down. Then I went down to the 5 minutes time frame. I saw that a change of character had happened. Now, I've explained change of character previously. So, once the change of character happened, I waited for a pullback. But since this was the local support, I waited for the breakdown of this level, because by just trading change of character and ignoring support and resistance, trade does not make sense. So, it broke the support. Then, at this very candle, I had entered the trade. And as you can see, it was an easy 50 pips trade. If I had holded it longer, it would have been 10 pips, but that wasn't my risk management at that moment. And anything can happen if I say that. Like, if I say I take a trade here, that will be my profit. So things of saying do not matter. What actually matters is what trade have you taken, what things that you have decided at the very moment, what your psychology was. So this was trade number one. Second trade is another good example of liquidity sweep and change of market structure. Now, in this 15 minutes time frame or 5 minutes time frame, gold had started a small uptrend. So I did not take a trade here because my bias was still for selling, and the selling plan was from this level again. So gold went up, swept this liquidity, the liquidity from this high, and then gave a strong change of character. As you can see, change of character with a very big bearish candle. I waited for a pullback. Then it was taking support at this level in the 1 minute time frame. But since I'm an intraday trader, I will take trades and entries in at least 5 minutes time frame. Okay. So when this trend line broke on the 5 minute time frame, change of character in the 5 minute time frame, I just entered for a scalp trade, and my target was liquidity below this level. This was the first target. This was the second target. But I had to cut my trade here because there was a high impact news that was going to come on 5:45. So I had to cut the trade on 35 to 40 pips of profit. You see, this was a one-sided profit. So these are two wonderful examples to show you that how market structure and liquidity plays crucial role in trading. Now, let me give you another example. I haven't taken a trade in this buy side, but as you can see, this was its recent swing low. And after sweeping its liquidity, just see how gold has rallied. This is the power of liquidity trading. Clear 15 pips upside move. So I hope you have enjoyed watching this video. I hope you have learned new things from this video, and make sure that you do follow these things when you're trading. This will definitely improve your trading, because if I had just entered after this breakout, I would definitely be in the liquidity for the market. So I hope you enjoyed the video, and for such exciting lessons and exciting analysis, do follow my channel, like this video, and stay tuned. We will meet in the next video. Thank you.